Palantir stock is a scam? The whispers are getting louder. Insider sell-offs, sky-high valuation, and the business model tangled in government secrecy. What's really going on here? Investors are riding the hype. But is this AI powerhouse the real deal, or are we watching a bubble on the verge of collapse? Stick with me because what I uncover today might make you rethink everything about Palantir's future. Also, don't forget to subscribe and stay updated with the latest insights. Palantir is not just another tech company. It's deeply embedded in national security, government data, and the heart of AI innovation. But here's the thing. With great power comes great scrutiny. While Palantir provides critical data tools for the US military, healthcare systems, and Fortune 500 companies, the company's close ties to government surveillance have raised serious ethical concerns. Palantir's core product Gotham was developed for intelligence agencies to track threats, and its AI-driven platform Foundry is used across industries to optimize operations. In theory, it's the ultimate combination of AI and data analytics, but it's also a double-edged sword. Palantir's technology walks a fine line between useful data and invasive surveillance, making some investors, and even former employees, question whether the company's business model is sustainable, especially as public sentiment shifts against mass data collection. Now, let's address the elephant in the room, Palantir's valuation. At a staggering 300+ price-to-earnings ratio, Palantir is priced as if it's going to grow exponentially with no hurdles. But does that hold up under scrutiny? Analysts are skeptical. While the stock is up over 133% this year, there's a sense that the company might not be able to sustain this level of growth. Even more concerning is the insider selling. Executives are selling off huge portions of their holdings, which has left many wondering, what do they know that we don't? Insider selling isn't always a bad sign, but when it's on this scale, it raises a red flag. Could it be that the stock's meteoric rise is coming to an end, or are the insiders seeing vulnerabilities we're not aware of? A major part of Palantir's revenue comes from government contracts, particularly with the US military. These contracts are lucrative, no doubt, but they also make Palantir incredibly vulnerable to shifts in political funding. For instance, if there's a change in defense spending, Palantir could find itself losing a significant portion of its income stream. Think about contracts like Project Titan, a battlefield AI system worth $178 million, or the $99.8 million military contract that has bolstered Palantir's image as a top-tier defense contractor. But here's the catch. What happens if government spending on tech and defense slows down? Or worse, if public backlash against surveillance and data misuse leads to stricter regulations? Palantir's dominance is tied to government favor, but that's a fragile foundation, and that makes long-term investors uncomfortable. Here's where things get really interesting. Palantir's earnings report is set for October 31st, 2024, and it's going to be a make-or-break moment. If Palantir doesn't hit the growth targets expected, we could see the stock tumble fast. Insiders are selling, the market is nervous, and the stock is overvalued. This earnings report could reveal whether Palantir's rise has been justified or if we're looking at a bubble waiting to burst. Now, the question is, do you think Palantir can meet these expectations? If they fall short, we might see investors pull out faster than you can say overvalued. In an effort to diversify, Palantir has ventured into new sectors like healthcare and electric vehicles. Their partnership with Nebraska Medicine aims to revolutionize healthcare operations using AI, while their investment in Faraday Future, an EV startup, shows they are trying to spread their wings. These moves could prove to be smart long-term plays, but they also add to the company's risk profile. The healthcare industry is notoriously slow to adopt large-scale tech changes, and Faraday Future has had its own struggles in the EV space. Whether these bets will pay off remains uncertain, but Palantir is banking on them for future growth. Let's talk about Palantir's biggest ethical issue, data privacy. While Palantir's tech has helped solve crimes, track down criminals, and improve hospital systems, its approach to data collection has raised more than a few eyebrows. The line between data optimization and mass surveillance is thin, and Palantir often finds itself walking right on that edge. Critics argue that Palantir's technology could easily be abused, giving governments and corporations too much power over individual privacy. With the growing public awareness around data privacy and the push for stricter regulations, this could spell trouble for Palantir in the long run. Will the backlash against big data eventually catch up to them? It's something every investor should be asking. Before we get into the exciting details, let me introduce you to Mumo Financial. If you open a brokerage account with Mumo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. So, is Palantir stock a scam, or is it just a misunderstood giant? The truth likely lies somewhere in the middle. On one hand, Palantir is at the forefront of AI and data analytics, with contracts and partnerships that make it a powerhouse. But on the other, it's burdened by high valuations, insider selling, ethical controversies, and an over-reliance on government contracts. Palantir's story doesn't just rest on numbers, it's also about perception. Public sentiment towards AI is evolving, and Palantir finds itself at the center of the debate. As concerns about job displacement and data privacy violations grow, companies like Palantir are facing increasing scrutiny from both regulators and activists. Some regions are already tightening restrictions on AI usage, and Palantir could find itself navigating a minefield of global regulations in the near future. Another critical aspect to consider is the competitive landscape. While Palantir has enjoyed a unique niche, AI startups and tech giants are quickly catching up. Companies like Microsoft and Google are pouring billions into similar technologies, aiming to dominate the same spaces Palantir operates in. As competition grows, Palantir will need to prove that it can innovate faster and maintain its edge, or risk being left behind as newer, leaner competitors emerge. There's also the question of sustainability. Is Palantir's growth organic, or is it inflated by short-term excitement around AI? Investors are looking for more than just promises. They want to see consistent revenue growth and expanded market share. If the company fails to diversify beyond government contracts and build a stronger foothold in the private sector, the hype could fizzle out just as quickly as it began. Palantir is a risky bet, one that could pay off big or leave investors scrambling when the hype dies down. What's your take? Drop your thoughts in the comments below, and if you enjoyed this video, don't forget to like and subscribe. Thanks for watching, and I'll see you in the next one.